Hey folks, welcome to Verified Investing. My name is Gareth Soloway, Chief Market Strategist here. Now in today's video, we're going to dissect the currency markets, specifically looking at the US dollar via the DXY. Then we're going to take a look at the British pound, the euro, and the yen against the dollar. So we're going to see exactly what the currency markets, the Forex markets are telling us. Are the big moves still in the forefront here? Where is the next big move coming? Let's take a look at the charts here. So we're going to start with the DXY, the dollar here. This is the dollar against a basket of currencies. And what we can see here in the short term, we're looking at the daily chart. So we have been trending to the upside. And just in the near term, what we do see is the beginnings of kind of a trend line. Do you guys see how if you connect these lows here, it does give us a little bit of a near-term trend. In fact, I'm going to take a look here and we're going to take a look at this. We're going to bring our trend line right through these lows here. And then we're going to drag it right up there. And what we can see is in the near term, we've been kind of going up in a parallel channel. Notice again, we push up, we pull back, we push up, pull back, push up, small pullback, then a bigger push, and when we're pulling back. And so the idea is here, as a technician, I want to pay very close attention to not only the upper range if we get a dollar surge right up here, but also does this trend line break? Now, one of the key tactics in technical analysis that I've discovered is that generally, specifically more steep uptrend channels or trend lines, they tend to break to the downside. All right. So right off the bat, for me, when I'm looking at this, I'm suddenly saying, okay, listen, we don't know if we're going to break here. Maybe we have one more move up, but eventually we likely break to the downside. All right. And the idea is here you're getting more and more extended to the upside. Eventually, you're going to break to the downside. All right. And again, this is something that I've studied for decades to see about trend lines. And notice again, it's basically what we're looking at here is a trend line, right? I mean, that's essentially what it is. I just used the parallel to show how these aligned right here and here perfectly. But right here, that's what we're watching here. Do we break? Do we bounce back up? How is the dollar going to behave? Now, this is at the very near term. I want to be clear. We're just going back to mid-September in the near term. In addition, in the near term, look at what we ran into. We ran into what we would call a perfect double top. So again, you're almost getting squeezed at this point. And the reason why I'm now showing you the horizontal trend line is because this is forming what we call a wedge pattern in technical analysis. In a wedge pattern, essentially, it gets squeezed tighter and tighter until it's forced, usually with velocity, to either break out or break to the downside. And so essentially what we're going to look for here is how we trade in here. Does it break to the upside or does it actually break to the downside? All right. So we'll keep an eye on that. But essentially, what I would say to you is in the next week or so, price is going to come to a head and it's going to either have to break down or break out. Now, a couple headwinds, right? So, number one, the dollar is still the reserve currency of the world. And so, in fear periods, there tends to be a flight to the US dollar. It's maybe not as powerful as it once was, but there still is that aspect to it, right? And so, as we get into a period where the stock market starts to look a little bit shaky, the economy in the US starts to look a little bit shaky and maybe spreads throughout the globe, even though the Fed is going to probably lower rates more and more and the government will spend more and more, which is dilutive in the long term, the question is, does the fear that looks like it's beginning push the dollar up? All right. I still favor the downside, and I'm going to show you why. But again, I like to put things in perspective of understanding why a move could occur. All right. What the chart is saying, but then what are the fundamental backings of the potential for upside, which would be the fear trade where people rush into the dollar, or downside where the Fed just overprints, the economy kind of stays lukewarm, neutral, and ultimately de-dollarization continues. Now, de-dollarization is continuing long term. I want to be clear on that. Other countries have made that very clear. They don't like the power that the U.S. has had via the reserve currency and what it enables the U.S. to do economically, politically, etc. And they've definitely started to buy gold, Bitcoin, and diversify away from treasuries. Okay, so what we have here is a very short-term factor to watch on the dollar, but let's race that for now. And I want to show you a couple other things here. If we zoom out on the chart, one of the things that I'm watching very closely is a zone that we actually did run into. And you can see it very clearly here. Like, look at how over here we came down, we hit, we bounced, we hit, we bounced, we hit, we bounced over and over again until we broke down. And now it's becoming resistance, right? And so just to show you guys this, let's put in a little bit of a rectangle zone here on the charts, right? So we can even go back here and we spread this right in this zone. And this has really been fantastic, either support, right? Or resistance. And that's another factor which has caused the dollar in the near term, not only the double top right here, but this is a bigger, I mean, it's not just a double top, it's actually a zone going back all the way to 2022, which has been resistance. And so, what I would say to this is this: the dollar in the near term, it could go a little bit higher to this higher end, but it's very unlikely the dollar is going to make a major move up because of this zone. When you see a zone like this, right? When we see a zone where for this long, going back to 2022, right, all the way through basically 2025, this was resistance, support, excuse me, support. It kept hitting and bouncing. What do you think the likelihood is that we come up, we hit it once, and we come up, we hit it, and then break right back through? I don't think that's very likely, right? And just again, looking at past performance, look at how many times 1, 2, 3, 4, 5. Eventually, on the sixth hit, it broke. Versus this is just really the second hit, maybe third if we include this, but it's again generally unlikely. All right. Then what we do here is we zoom out even further. In fact, let's go to the weekly chart and we're going to look at this longer term trend line going back to 2011. It kind of even starts back in '08 when the dollar began its recent move up, right? And so we've been, even though we've had a big fall recently in the dollar, right? This last year, we've had a big drop here. Let's be fair. The dollar has been in an uptrend since '08, the financial crisis, which makes sense because the Fed was kind of the king player amongst all central banks. The US economy was like the golden child, right? And so it made sense that it really reinforced the dollar's importance on the bigger landscape. But that again seems to be shifting, right? And one of the things I'm watching is look at this. If we connect this line here, look at this trend line going back to the financial crisis lows. Now, you violated it a little bit here in 2011, but then look, you reestablished, you hit again, you went away, you hit again, you hit again, and then you've hit again. Look at this. And so what we're now seeing is that even though we had a near-term kind of double top, it was actually part of a bigger resistance, right? Bigger resistance. And that again is unlikely to break. And then if we look at this, remember how many times, right? So if we look at the dollar, how many times did we hit? 1, 2, 3, 4, 5, and then on the sixth hit, we broke. Well, what about on this trend line? If we know the more we hit a trend line, and this is part of technical analysis, the more we hit a trend line, the weaker it becomes. And generally, if you hit 6 or 7 times, you're going to break. Well, now, if we put the pieces together, we say 1 hit, maybe 2. This will be a half hit. 3, we'll consider this 4, 5, and 6. What does this tell us? What does it tell us, guys? To me, at least, it tells me that the path of least resistance is actually to the downside. Because again, we hit 6 times on top of this line. We broke down. We've only really hit 2. So it's unlikely to break up. We've hit 6 times on this line. What's going to happen? Eventually, we come down in the next, let's say, 6 months to a year, and we break this long-term trend line going back to the financial crisis. And then once this trend line breaks, guys, this is your uptrend on the dollar breaking from the financial crisis in '08, '09. Yes, you're going to get bounces, but the dollar demise will continue at that point. Pretty remarkable, right? Again, lots of interesting things here in the US dollar chart. I love this stuff, guys. And again, as always, I'm here to dissect it. So as always, guys, I'm going to continue on. We're going to briefly go through the dollar yen, the British pound dollar, and the euro USD because I want to make sure you guys get a complete picture. But again, this dollar analysis is on point in terms of understanding technical analysis. It's not based on personal preference. I couldn't care less, right? I mean, dollar strong, dollar weak. It is what it is. I can't control it. I'm not going to pretend I can. Charts I can read relatively well, and I can get us probabilities. And the probability near term, we're going to have to see which way it moves. Maybe we get that little move up. But again, we're into that upper zone And the path of least resistance to me over the next 6-12 months is down on the USD. All right, let's flip over to the dollar yen. The dollar yen broke above this, right? This is a weakening of the yen, right? So the higher this chart goes, the weaker the yen becomes. Notice we broke. So look at this, guys. 1, maybe 2, 3, 4, 5, and then boom, broke through. Now look at what it's doing. It's retracing to the scene of the crime. This tells me this should now become major support and it should go up. So the yen actually is looking relatively weak against the dollar. Okay. And again, that's telling me, at least, as long as this level holds, as long as basically 152 holds on the USD JPY, then the yen is likely, the dollar yen is going to head higher. And again, that would be telling us the yen is actually weakening against the dollar. Now, that seems a little weird, right? Because how does that mesh with a longer term weaker dollar? Is the yen going to really weaken more than the dollar? And the answer is most likely. Why? Well, look at GDP, debt to GDP numbers, right? And so if you look at the data, debt to GDP in Japan is 240, 230%. US debt to GDP is 130. So again, you see a difference there. Japan is much more heavily in debt than the US even. So it kind of makes sense, right, that we could be looking at a weaker yen, even weaker than the dollar because of the debt issues. All right, now let's compare that to other charts. What about the euro? The euro here, this is an interesting chart, right? Let's flip over to the weekly chart. The euro has broken out against the dollar. Now, this means that the euro is actually strengthening against the dollar. And this is basically, I know it looks the same as the dollar yen, but one is the JPY USD. This one's EUR USD, excuse me. So this one's USD JPY. So notice it's the flippage. And this is just how people look at these charts. And I apologize if it's a little confusing to you newbies. But essentially, it depends on, are you looking at dollar in terms of yen, or are you looking at euro in terms of dollar, right? So again, there's a difference there. But in any case, the point being here is the euro has strengthened and broken out. And look at this again. 1, 2, 3, 4, 5. On 6, it breaks out, it retraces, and then moves higher. Best chance for a trade on this would be to buy any pullback into this level. So if the dollar were to strengthen a little bit more, then we would see the euro pull back. But then this is a great long opportunity, guys. Based on this chart, look at this. Basically from the financial crisis, right? The euro's been weakening against the dollar. Now the euro looks like it's broken out, which is pretty much telling us the dollar is likely going to weaken and continue against the euro, which then reaffirms what we just talked about on the DXY. All right, so that's a big player right there. I love showing this chart. And then lastly, the British pound, same thing. Looks like it's going to strengthen against the US dollar. And here we have a parallel. Look at this beautiful parallel. I mean, look at these lows matching perfectly with these highs. Again, 1, 2, 3, 4. And actually this one, well, no, you kind of got a fifth hit right there, right? It went up and then reversed, and then it broke out. Support, support, support. This is now getting a bid. I think the pound is going higher based on this breakout of this trend line here. Very cool stuff. All right. So again, to summarize, the dollar in the near term could get a small little bounce, still a little bit further upside, but the path of least resistance appears, based on trend line hits, to be to the downside on the Dixie, right, on the DXY. The yen still does not look like it's going to strengthen against the dollar significantly. It looks like the yen is going to weaken. However, the euro and the pound both look much stronger and likely will strengthen further against the USD, the dollar. All right, guys, as always, I love you guys. Thank you guys for spending time with me. And please share this with friends and family if you think they would find this analysis useful. I'm always here to help with technical analysis, and I do appreciate each and every one of you. Have a good one. Take care.